What is up, all you real estate loving individuals? This is episode number 23 of the Real Estate Take podcast, and I'm your host, Wendell Butler. This is your go-to podcast with tons of information regarding the current real estate market, where we get various real estate professionals' current take on different areas of real estate. For today's guest, we have Seth Sundberg. Seth played professional basketball with the Lakers and overseas before transitioning into real estate, where he initially did very well. He got overly confident, though, and took on the IRS, lost, and ended up going to prison, losing everything. Now he has rebuilt his life, owning a 414-unit multifamily portfolio, and is now teaching others how to build their own through his Multifamily Accelerator. The program offers live weekly coaching, deal-specific discussions, and strategies to overcome goal blockers while navigating market shifts. It's designed for operators acquiring 100 to 250 units in B and A class areas, focusing on properties built in 1990 or later. With 7FS and its partners involved in 2,000 plus units and 130 million assets under management, this is a community for committed doers leveling up their game. It's for those with clear goals who understand their gap and are ready to identify it and do the work to bridge it. This isn't for people casually interested or uncommitted. They work, grow, expand, navigate, create, and excel together, using multifamily real estate as the vehicle to become the person needed to achieve their desired outcomes. So let's welcome on in Seth, because there's a lot to go into there. Seth, how are you doing today?
I'm good, man. It's good to be here. Thanks for having me on.
Yeah, I love your story. I can't wait to dive into it. I'll go anytime it's going from like total, I would say that's pretty rock bottom, going to prison and finding a way to climb out of it. Yeah. There's just so many lessons learned, and it's just proving the pudding that in life, you can overcome any challenges. So excited to hop into this. And I just want to kind of initially give you the floor. I usually start off all podcasts like this and just explain more who you are, what got you into real estate, and just your backstory. And I'm sure people want to hear more about the basketball portion and also going to prison portion, So take the floor to start.
Appreciate it, man. Yeah, thanks again for having me on. It's definitely been a wild ride. Like you said, played pro ball for 7 years, played with the Lakers in 97 and 2000, and then was overseas for the rest of that time. When I knew my basketball career, I wanted to play, have a long career in the NBA, injuries, things like that, timing and all that stuff happens in professional sports. So I knew my window to having that long career in the league was coming to an end. So I said, man, I don't know what I'm going to do, but I was smart enough to realize that while I made a lot of money playing basketball, I also spent a lot of money, right? So it goes fast. And I realized if my career is coming to an end and I wasn't sure what the next step was, if you're not making the money and you're still keeping the same lifestyle, right, you burn through it pretty fast. So, I didn't want to end up in the streets. So I was like, well, I'm going to at least protect some of this money that I have left from myself. And about 2003, I ended up buying a couple houses in Las Vegas. Just more, I didn't know what I was doing. I didn't know anything about real estate at all. I just figured if I buy some property, at least I have to refinance it or sell it to get that money out, right? So it was kind of protecting it from myself. And that just became, I really fell in love with the structuring of real estate, right? And how to really find a deal, what it looks like, where the value's at. It was a good time in the market, right? So kind of dumb luck. And I was like, all right, I figured a lot of stuff out. I had a really good real estate agent that helped me out there and a not so great loan officer. And I didn't know why it wasn't great. So I started kind of digging into that part. And long story short, I ended up running a branch of a national mortgage company from that. We had 17 loan officers. Again, it was a good time in the marketplace. And we had the mortgage company going. We had an investment firm going, right? I ended up making a lot more money in real estate during that time than I did playing basketball. And again, thought out of my own arrogance and stupidity, really, right? I'm doing all the right things, et cetera, et cetera. In that space of arrogance, I figured I'd take on the IRS, right? And like you mentioned, I did, and I lost, and I spent 5 years in federal prison from 2009 to 2014, and I lost everything in the process, right? So, starting from ground zero in 2014, prison was the worst thing that ever happened to me. Also, at the same time, one of the best things that ever happened to me, which is kind of strange to say because you get an opportunity to really know who you are, know what you care about, do some introspection, right? And I think I don't wish that on anybody, but I definitely wish people the opportunity to spend time with themselves, right? A lot of times in life, we just don't get that opportunity, right? Things are moving fast, deals, family, work, et cetera. Like everything just goes quickly and we don't have time to go, wait a minute. minute. Who am I? What do I care about? What do I not care about? What's going on? Am I in the direction that I want to be? Am I where I want to be? What's happening? And people choose to do that. Prison kind of forces you to look at that, right? So in 2014, I got out, had zero, had a couple things that I wanted to get done. I wanted to really raise awareness around kind of the incarceration system and the reentry system in general. So started a protein bar company that was called Prison Bars, that was to be able to get that information out there and to have smart people having conversations around the system and changing that. I did some consulting and with a technology company, with a Y Combinator company that, and I don't know if anybody knows YC, but they started Airbnb and Dropbox and Reddit and Stripe and a bunch of other unicorn tech companies, which was a great experience as well. That company was specifically focused on reentry also. And about 2016, I said, all right, it's time to jump back into the real estate realm again. I didn't want to go back into residential real estate, which is what we were doing previously, and started moving into the multifamily space 2016, 17, and just kind of grew from there. I got some coaches around there. And one of the things that I tell everybody too is, people look at going, how do I get into a space if I'm new to it, or how do I just continue to improve if I'm already in it, right? And one thing I say is like, who's your mentor, right? Who are you getting coached by? Who are you, who's showing you the rope? Who's where you're at? Who's where you want to be? Right? And are you talking to them? And most people go, what? No, coaching. I don't know what you're talking about. It became clear that most people that have played sports at any level are used to being coached, right? But people that haven't either been engaged in sports or played, for a little while, but have been out of it for so long, it's kind of a foreign concept. But I think it's a critical piece. And, I don't do anything. I have coaches now that I'm working with that are at levels that I am, that I'm working on taking the next step. So that's why we put the accelerator together, to help people that are looking to grow and get there and want to be coached, want to have some accountability and things like that. And that brought us to where we are today.
Yeah, to quickly talk about like the coaching, it's the way I put it for coaching and having mentors is, yeah, you don't necessarily, I guess, need one, but if you want to go faster and skip a lot of steps and also learn within a more timely manner and also see mistakes that your coaches can point out quickly and not make those mistakes, which could actually make it so you never even progress to the next step. That's why coaches and mentors are so important. Yes, you can like read books, you can watch YouTube videos, you can whatever, learn a lot yourself. There's a lot of free education out there, but what that does is, one, it takes a lot of time. Two, it could get your confidence up, but it doesn't really get your confidence up to the point to take action for most people. Right. And three, it's always good to have kind of a soundboard to bounce off your coach and be like, hey, I ran into this situation. What would you do here? And then your coach can be like, oh, well, when I went over that situation, this is what I did. This was the wrong way to do it. You should do it this way because it's the way to do it correctly. And you just basically skipped out on one, possibly making a mistake there that could be costly. Two, trying to figure it out yourself, which it could just take a while. So that's the benefit of coaching and mentorship, which people don't really understand. It's kind of it's fast forwarding your progress to the point that you might want to get to faster than just doing it yourself.
Yep, absolutely. And it saves costs too, right? I mean, you pay for information one way or another, right? You pay, the marketplace makes you pay, or you get in rooms with people that have already been and done the things that you are looking to do, right? So that's kind of the thing. And when the marketplace makes you pay, it's pretty painful. So
yeah, backtrack a little bit too. So when you were in prison, obviously, you probably went through a ton of just self-development because you were obviously with yourself. So you were just focusing on yourself, thinking about yourself. I'm sure you met some like interesting people in there that also were going through the same thing and kind of stuck together and helped each other grow. Some people, I feel like, think about prison like everybody there is just terrible. It's like, no, I'm sure you could find good groups of people there and grow together and have kind of the same ideas. Yeah, there are bad people there though you want to stay away from, which I'm sure you could speak on. But like, what was kind of like the biggest lesson learned just from thinking about your past as you were in prison and then what you were going to do in the future? Kind of like what changed you in there based on before you went in there? Were you just like overly confident before you went into prison and you were like doing really well and you're like, nobody could touch me? And that's why you were probably like, hey, IRS, like, I'm not paying that. And then they're like, hey, you got to pay that. And you're like, they won't know. And then I don't know what happened in that aspect, but yeah, just talk a little bit about that, how your mind shift changed.
No, for sure. It's a good question. When I got in trouble, like I said, I was very arrogant, right? And in the space of arrogance, you think that everything you do is right and nothing's wrong. Nobody can tell you nothing, right? And it's a very weak position to be in, I'll say, right? Because, and I didn't know this at the time, right? You think, okay, great. And the thing that I really learned in there was was when I got in trouble, I was blaming a lot of other people. It was going, hey, so-and-so's fault, so-and-so's fault, it's this and that. Instead of like, and then I read a quote actually from a really good book. If anybody's interested in reading, it's called Outwitting the Devil by Napoleon Hill. Napoleon Hill wrote Think and Grow Rich, which most people know about, right? But this is one of his lesser known, well-known books, and really, really fascinating concept and good book. But it had a quote in there. It said, every tragedy carries with it the seed of an equivalent benefit. And I read this about 2 years into the sentence. And this whole first 2 years, I'm still in that space of arrogance and blame. And really, ultimately, what it is it's a victim mentality, right? And you go, oh, everything happens to me, not for me, et cetera. So when I read that, I started going, okay, that was the beginning of kind of a paradigm shift going, all right, like if that's true, this is a pretty big tragedy. I lost everything. My family's been hurt. There's a lot of tough stuff in this. But if this is true that there's a seed of an equivalent benefit, what could that be, right? And it just changed my mindset from going, all right, what's going bad to what's actually happening here. And from that point on, started looking at it like I would have never had this much time. I learned how to play guitar. I read over 500 books. I got a couple associate's degrees. I started meeting people, like you said, that were vibing on the same level and going, all right, we screwed this up, but what is it? And met some hedge fund managers. I met people that had real estate portfolios, huge real estate portfolios, ran multi-billion-dollar companies that got caught up in something. And so it's like you start learning and growing and figuring that piece out. And that was kind of the beginning of the shift, right? To just going, all right, there's no more of this somebody else's fault. It really, what it came down to ultimately, it took a while to get there, but I realized, look, I'm responsible for all this. It's on me. I did this. I chose to do this. I chose to do that. And that's where it led me from those decisions, led me in there. So it's like, okay, well, what are we going to do when we get out? What do we plan for? How do we go? And there's a lot of stuff that you have to work through. And that's just kind of life and figure things out. One of the things about the prison system that's really kind of fascinating. Well, there's two things that I'll share that your audience might be interested in. One is that the currency that is used inside prisons is stamps and fish.
Really?
Right. There's no money, right? So you figure out how to barter, right? You figure out how to
negotiate.
Negotiate. Right? Hey, I got 3 Max, I got some stamps, and I need this thing, or I'm going to buy some shoes or whatever it is. There's a kind of a foreign exchange, and each facility is different as far as what they give you from like the value of the fish and the stamps, et cetera. The other thing is that when you go into the system, you become a number. You're kind of dehumanized. Not kind of, you are dehumanized, right? So yeah. It's a strip, it's like an intentional stripping of that humanity. And for me, it was hard because it was like I had an identity and things like that. And then you become a number and then you're like, okay, well, this is that. It was good. It ended up being good because it stripped it down. You have great coaches, right? That are beginning of the season, right? They're just dead, right? They're running you through double day practices. They're doing all kinds of stuff. And really it's to break you down and then to rebuild you up in a process that works for the team, that works best for you, et cetera. That's what good coaches do. And the system, if you let it, is a good coach in that respect, right? It does a good job of breaking you down. The problem is it doesn't have a ton of rebuilding, right? Unless you choose to do it yourself, right? You have to kind of be responsible for that. So those are two kind of things that were pretty fascinating to see in the process.
Yeah, that's why I'll equate this to, like the military, because I'm a veteran and it's kind of like what basic training is. You go in there, they treat you a number. Like they don't care who you are, where you were. You can say like, hey, I'm this person. They're like, I don't care. Like, they smoke you. It's like, and the point of that is, it's to not humanize you, I guess. It's to break you down to the point that you're just on the same level as everybody else. And then you are built back to the way that you want to be. And they give you like the military gives you like the route to get there. Like they teach you like which way you want to go, et cetera. Probably that's what the prison system probably lacks. They kind of get you to that point where you can rebuild yourself then. But that's why I tell everybody like, hey, the military, I think everybody should join it because one, it just totally gets the arrogance and I'm the best, whatever. Like I can do whatever I want out of you because it lets you realize that you're such a small person compared to like the grand scheme of things. Yeah. And what really matters is just how you build yourself from like a self-development standpoint, how you are from like the base level, which is super important. And like, you can't do anything in life. You can be like a billionaire killing it in whatever industry you are. But if your self-development or if your personal self isn't strong, like it's going to fall apart. It always will. Like your baseline of you is what holds everything together. So that's really cool that you took the process of being in prison and that whole process of them kind of dehumanizing you and making you a number and breaking you down, you took it the good way by rebuilding yourself after a while. Like I know you said it took a little bit because you're probably like, what the heck? I mean, you went from playing pro basketball, like running a multi-million-dollar loan officer or mortgage lending thing. Like you're killing it. And out of nowhere, you're like, boom, hey, you're just a number. We don't care about you. And you're like, what? Do you know who I am? Like you see those videos all the time. Like, do you know who I am? But you allowed it to do it to you. And that is how you kind of overcame it. Yeah, it took some time. I guarantee you, and you know this too for yourself, like you're just 10 times just a better person, better individual, and you probably can go so much farther than you ever expected now that you went through that. So it's kind of, like you said, it's like a blessing in disguise because nobody wants to go to prison. You don't want anybody to go, but it's probably the worst. It's probably like one of the worst experiences ever. But if you take it like as it is and say, hey, this actually helped me, that's where you get rid of that victim mentality. And I agree with you. Victim mentality is like the number one. It's the worst toxic cancer that you can have as a human. And I honestly feel like a lot of people have it, maybe 80%. I don't know the number, probably 80% of the world does. It's sad when you run into those people and you kind of just want to avoid them because it's negative and you can't progress. But the second you decide to take full accountability for anything, even if it's like not even like your issue, but you say, hey, that's my bad, let me fix that. Or like, I did this, you just become so much stronger as a person. And you realize like, and then your team starts growing and then everybody around you. So you start connecting with people that are like-minded and you start pulling people in that are the same. And then I don't know, your trajectory just goes up. It's hard mentally though.
No, for sure. And one of the biggest things you mentioned too is like you start respecting yourself. Yeah. Right. You start going, all right, I know what I care about and I know what I don't, and that's okay. Right. And self-love and all these things, right? We have crazy numbers of anxiety and depression in this country right now. A lot of this stuff is just stemming from that kind of love myself. I care about myself. I'm authentically who I am. And if other people like it, awesome. If they don't like it, cool. Like that's okay. We're all on this journey. Right. So it definitely does take a while for the ego to die, and the ego fights, right? It doesn't want to, doesn't want to die. And it's something that we deal with each day, but it's a good process to get through. And like I said, I don't wish prison on anybody, but I wish the opportunity to have that kind of self-inspection and introspection to learn about what you care about, what you don't.
Yeah. Some people need it. So
we all need it, for sure.
Cool. So let's move on to just a little bit more into real estate. And I wanted to touch on, so before you went to prison, you were focused mainly on not necessarily like investing in real estate. You were mostly just doing lending, right?
We did both. We did lending for clients, and then we did investing through the investment firm. And it got to be multi-million-dollar portfolio, all in residential at the time.
Residential. So it was like 1 to 4 units. Like nothing higher.
Yep.
Okay. So what caused you to switch from residential into multifamily? What was kind of like the point that you were like, let's not do residential again. Let's kind of move over to this multifamily space, because you can make a lot of money in both, and both are fantastic. But what was the one thing that kind of sets that aside to go multifamily rather than residential?
Yeah, there was multiple things. It's a great question. There was multiple things. One was I like being part of a team, and residential, while you still have people that are on the team, you have appraisers that you're working with, the brokers or things like that. There's not like a GP-LP type of relationship typically in the residential space, right? Which I did like about the multifamily space. I think the numbers are larger, right? I had a story in my head moving from residential, and I see this in a lot of people that are moving from residential to multifamily, that it's a much more difficult process. It's much more risky. And it's just challenging, right? It's much more complex, right? And it's so much more difficult to learn and understand. And all of those stories are not true, right? It's just the bottom line, right? So it's actually less risky. There's a learning curve, but there was a learning curve for residential, right? And once you really understand it, it's a much better process. It's changing right now, which is fascinating to kind of see. The multifamily space is in a shift, similar to how residential had kind of a change in the 2000s, early 2010s. And we're seeing some of these things kind of restructure and combine with the macro elements of new administration and some of the regulation monetarily and fiscally, and as well as just kind of dealing with the different laws, the different tax laws, the different changes that are happening there, right? So it's just fascinating to see. And one of the things that I tell everybody is like, I don't know, and I don't pretend to know what the future holds. I'm looking at data every day like everybody else, and going forward, I think that people that say, oh, I know exactly what's going to happen in this marketplace, like those are the people that I run from, right? Because there's so many different factors right now that we've really kind of never been in this space, and it creates opportunity, right? But it's also like there's a lot of unknowns that are still yet to be played out, right? Like this morning we have tariffs on Mexico and Canada, right? And this afternoon we don't.
Yep.
It's like moving fast, right? And it's cool because in startups, that's how things move, right? Startups move quick. You iterate, you change, you adjust, you take new information in, right? You get something else out to the marketplace, iterate, change, adjust again. And that's the process. And that's kind of what the country is going through. Real estate has been notoriously like a slow process, right? A slow moving animal. And I think things are changing right now. I say some of the biggest opportunities we don't even know about yet. I think there's a huge opportunity for technology to impact the real estate space and big time in multifamily. I think there's I don't know if you're familiar with this, but there's a New Market Capital, I think last November, was the first institutional grade lender that I know of to actually do a refinance and cross-collateralize the loan against the multifamily asset, but also require the general partnership to hold Bitcoin.
Oh, wow.
Have you heard this? Yeah. And there's some parameters, but this is a direct underwriting addition from the bank. Right. So they have to hold it for 4 years. They take a percentage of their reserves and put it into that. Right. So that's just the beginning of kind of new technologies and new ways of being in the space that are, I think coming out. So yeah. So, I mean, I think the residential to multifamily game is different, but it's totally learnable, totally doable. No investing has guarantee of success, right? Yeah. But the process itself is not this black box. It's a doable thing for sure.
Yeah, I would say, because I do both. I do residential, then I do multifamily as well. I think people like residential because it's a little bit quicker. You can get your return on your money quicker, especially if you do like fix and flips or burrs or things like that. It's a quicker time frame where you can get paid out and be like, oh, this is working. Multifamily takes a little bit longer, but the thing about 5+ unit multifamilies or commercial and things like that is now instead of going to, say you're doing a fix and flip with residential and you have to look at sales comps and how things are renovated and compare that way, now you're kind of looking at the math behind it, which people that like math love multifamily and commercial because it's just numbers. So it's like, hey, how can I increase net operating income of this property? And based on the sales data and the cap rate of the area, how much can I make this property worth after we rents or increase some fees or lower the expenses, etc. And the gap you can make of building equity within that is substantially higher compared to residential. You're dealing with like multi-million-dollar assets, which if you raise like 100 units rents across the board, $50, you're like, oh, that's not a lot. But then all of a sudden you're like, wait a minute, I just increased the value of this property $1 million or $2 million. It's like, that's what's beautiful about it. So I think when people get scared of multifamily, it's more just they don't understand it and understand that pointing fingers doesn't do anything. But the second you start taking accountability, you can just progress and move so much farther. And then people start respecting you more. Systems and ways to do it that are pretty honestly easy. I think the bigger you go, the easier it is. You have less risk. You have a lot of units. So like if a unit goes vacant, you're like, oh, that's not a big deal. But single family unit goes vacant, you're like, holy shit, I need to get someone in there now.
Exactly.
So I think there's pros and cons of both. But yeah, I do agree that multifamily, I'm a big multifamily guy. And I think the shift right now that you're talking about, it's kind of harder to find deals in multifamily because sellers are holding on to like, I want to sell it for this price. And then we're like, hey, but the interest rates are like 7%, 8%. So we can't buy it at that price. It doesn't work. Yeah. You gotta have that conversation. So it's a little bit harder to find a deal when you do find one, especially in this market. If you can find one in this market, when the market shifts even more to more favorable, you're going to be doing amazing in the future because you're kind of in I would say one of the most challenging markets currently.
Absolutely. Yeah. 2024 was wild for sure.
Yeah. So you switch from kind of understanding residential to multifamily. Let's just go all the way back to the beginning from when you were first acquiring your first building or doing your first partnership or doing your first capital raise to do that. Could you dive into just one of the first projects you got into and lessons that you learned doing it? How hard was it mentally? What did you learn? How did you set up a team? Or did you just kind of dive in it and just learn as you go?
Yeah, no, we one of the first deals we did was in Mississippi, actually. It was an 80 unit and good project, good kind of smaller city inside of Mississippi. One of the first things I learned was how certain investors, we go out to raise capital, right? And certain investors were just automatically Mississippi, no.
Yeah.
It's not going to happen, right? So you really start to tailor who gets into, and the property was a B class property in a B area. We've done some C stuff. We've even done some D stuff, right? And each individual investor has their own preferences, right? So really tailoring that, what those investors are looking for, specifically just ROI based, is it risk based, is it location based, what the asset class is, type of thing. That was one of the biggest learnings to go through. And in the process, setting up the team is important. It's critical. You have to do that in each market too, right? Which sometimes if you're running with the same GP team on each project, well, you're still going to have boots on the ground teams that are going to be different in different markets, right? So doing that is a different process. It takes time. Everything takes twice as long and costs twice as much when you're doing that type of stuff. So just plan for that. But if you're mitigating risk and looking at projections conservatively, that's the right thing, right? So it's funny, talking about underwriting is such a big deal in this business. And one of the things that I think is just a critical piece, and whether you like math or don't, you just have to know it. It's just there. You can't raise capital, even if you're the asset manager, fund manager, things like that. You're super personable, extroverted, all these things, right? You still need to know the underwriting, still need to know the math, right? You just can't, it's just impossible to raise, I don't know, but possible, but very, very difficult to raise capital without clearly understanding the numbers and the business plan. So funny story on that. When I was still running a mortgage company in the investment firm, I had a close friend of mine that worked for a company in California, and they did commercial acquisitions, multifamily acquisitions. They had about, at the time, I think 250 million assets under management, and it was still a pretty boutique company. So he calls me up one day. He's like, "Hey man, I'm looking at this property in Seattle. I think at the time it was 150 units. And he's like, you should come out with me and check out the building." And I was like, cool. I don't know anything about multifamily, but it's interesting. He's like, "Don't worry about it. I'll teach you how to underwrite on the plane." Like, it's like going from California to Seattle is not that long. I'm like, really? Okay, it must be super simple. And so we get on the plane. I'm like, whatever. Even if I don't understand it, we go out to Seattle and hang out and party and do all that stuff. It's a fun place. So we jump on a plane. He starts pulling up the spreadsheet, starts going through the thing, and I'm not the smartest guy on the planet, but I'm not the dumbest. But it's like I start looking at it and he's like, "Look, see this, see this, see that." And I'm like, "I don't know what you're talking about." And I spent about a half hour trying to figure it out. And it was just like, it just wasn't clicking. And I like numbers. And so we ended up getting to the property and talking with the broker, and I don't know what I'm even looking at. He's like checking it out. I'm looking at it like a residential kind of analysis, and we're going through each unit and I'm looking, okay, there's a crack over here. There's this and that. What is it? Like that type of thing. He goes, I'll be back in about 10 minutes. You guys just talk." All right, fine. So he comes back. He's like, "All right, it's not going to work." And I was like, "All right, cool. Let's go have a drink. And I guess we're done here." But come to find out, basically what he was trying to do was, like you said, decrease the garbage cost, which I guess was really high on this property. And that would have boosted the kind of immediate NOI to see if he could do it. And he had some ideas and ended up thinking that it wasn't going to work. So we didn't end up purchasing the property. And I didn't actually end up understanding the underwriting either. So one thing that I do, and happy to offer this to all your listeners as well, if there's anybody that's curious about learning underwriting, I have a half-hour video that I taped and give you guys my template. If you want, you can just follow me on Instagram at Seth Sundberg and DM me underwrite, and I'll send that out to anybody that's watching this podcast for sure, because it is such a critical component piece of the thing that then you can watch it over and over again. You can practice, and then it just becomes like lifting weights, right? You do it, pick up something heavy enough times, and your body just gets used to it, right? And same thing with underwriting.
Yeah, especially when you underwrite enough to the point and you're familiar with the market enough that you can just look at a price of a place and be like, "That's not going to work." That's when it gets fun, because you're like, you're like, "That's going to work. That's not going to work. That's going to work. That's not going to work." And then you decide which one's going to go into more. But yeah, underwriting is super important. And a lot of people miss this, or you got to almost take, when you're underwriting, you got to take your emotions out, right? You got to pretend like, "Hey, I don't care about this property. I don't care at all. Let's just look at the numbers." And you got to conservatively underwrite everything, because no matter what you underwrite, I guarantee you it's going to be more expensive like every single time. So you got to conservatively underwrite. I think some of my rules of thumb is like, I always underwrite whatever the market rents are that I think it's going to be. I deduct it like $100, whatever like the expenses are going to be. I still add a little bit on top of that. I always round up on expenses, whatever they give you, round up. And then always do your due diligence too, where if the broker or the seller is giving you numbers, look it up yourself. Look up the taxes yourself. Look up the actual insurance yourself. Call an insurance company. Be like, "How much would this be insured for?" Especially insurance nowadays, because it's all over the place. Like seller might tell you, "Oh, it's only like $6,000," and it's because he's doing actual cash value, not replacement cost. And you call an insurance company and you're like, "How much would this be?" And they're like, "Oh, that'd be $25,000 a year." And you're like, "Holy, that kills the deal immediately," right? So underwriting is so important, and people get scared of it because they don't like numbers and stuff. But all it is, and I'm sure your video breaks it down really easy too. So I recommend you guys to go watch the video. It's just getting how much money's coming in from rent and fees. And then you just deduct all the normal expenses And then whatever you have left over, that's your net operating income before paying the bank and before paying interest from the bank and taxes and stuff like that. And then you can do the little cap rate calculation to figure out how much it would be, how much it should be. It's really simple once you get it down once. And but when someone's first looking at it, they're going to be like, what?
Right.
But once it clicks and they're like, wait a minute. So you're telling me if you can increase the rents across the board just $100 each, I can make like $1 million or $2 million. And it's like, yeah, they're like, oh, that's beautiful. That's where it gets exciting.
Yep, absolutely.
Yeah, I love multifamily. I came from New England. I grew up there the most, and there's a lot of multifamily there. So I think that's where you can build real wealth. And I love that you give coaches, mentorship programs, things like that for it. And can you actually just dive into that a little bit more, kind of like what you do with that, and just get some insight and information on that to the listeners, just so they can know too?
Yeah, absolutely. So the Multifamily Accelerator is really based on tech accelerators, right? It's like one of the things that I saw in real estate was there's a lot of people in real estate, especially in the multifamily side, that are growing, working together, figuring things out. There's a lot of people that are new into the space that are looking at going, okay, great, I want to find deals. I got the information. How do I actually just implement this? And some great coaching and some great teachings and things like that to really get that information out there. But there wasn't like a space, like an incubator, where you go, all right, I have this new business, which is what it is, or a growing business, whatever stage of the business you're in. And I need to be a part of a community that's like growing, figuring it out. I need to have somebody look at it and go, okay, you're pointed in the wrong direction, or at least you're slightly off in that direction. And so I just saw that was kind of missing in the space. We worked with a lot of people that were responsive to their deals with them, and they'll find a deal and they'll do all this, but it became kind of unable to be managed properly for us and our team, right? Where people are like, hey, let's chat, let's jump on the phone, let's do this. And it's like that schedule wise, it became more challenging. So I was like, let's put an incubator together, and we get everybody together. Now there's becoming like cross collaboration, which is cool, where people meet each other in the incubator and they're in the same area. So now they're partnering up, talking. It's like divide and conquer type of thing, which is really fun to see. But yeah, we do a weekly coaching, which is live, and everybody brings their deals and where they're at. We do a monthly call that's open to anybody, right? Where we'll analyze a market, and then we'll talk about some hot seat stuff, which is a lot of fun because you get into people's mentalities and some of their blockers and potential blind spots as well. So, and then it's basically everything that I know about the space. We have some software that people get access to when they join the accelerator as well. And it's at 7foot.capital. If anybody's interested in hearing more about that, for sure. 7 feet tall. So all my stuff is branded as 7 foot something.
Love it.
Yeah,
love that. And I'll be sure to put that in the bio too for everybody to click. But cool. Yeah. So that's awesome. And that's awesome that you guys do weekly and monthly calls too, and actually go over real life scenarios. That's the biggest thing, because there's a lot of people out there and quote unquote gurus that just give you like a PDF or like videos that just show you stuff. But it's the coaches and mentors that actually have like one-to-ones and actually are sitting on the call with you and going over specific deals. Those are the ones that are the most beneficial. And I'm glad that you do that, because that's what's kind of missing in the real estate area. And I think it's coming back more. There's a lot of more real investors and real people with real experience doing that now, because there was such an influx during like COVID and stuff. There was such an influx of the gurus that were like, buy my PDF, you'll make $10,000 in a day. It's like, no, you won't. They haven't even done a deal. They're just copying some book that they read and selling it. So I'm happy that this is happening and more people are doing this. And I highly recommend everybody to go take a look at this, because I'm sure it has a ton of information and it's just super informative, especially people that want to get into multifamily.
Yeah, one of the fun things that we've seen too, and it's an organic process, right? Like it's not a one size fits all for anybody. That's just kind of the space. But we're seeing a lot of people now with the shifting environments really focus on their niches, right? And going, okay, we got some people in there that are focusing on mobile home parks specifically now. They came in and they were like, well, I really like this. And that was kind of just the evolution of their journey. And we have people working on assisted living facilities and things like that are on these big, large projects. And it's like, great, that's digging in and adapting to changing marketplaces, which is critical, right? So it's fun to see that process evolve.
Well, yeah, they say riches in the niches, right? But also one of the most important things to become wealthy or be successful in what you do is to focus on one thing and get really good at it. And then you can start kind of spanning out. You see all those videos that people like, every millionaire has 7 streams of income, blah, blah, blah. You know what I mean? And it's like, yeah, they do, but they focused on one specific thing, got really good at it, made a good amount of money from that. And then they started investing and growing growing from there.
Yep.
You don't want to do 7 things at once. And in real estate, it's super easy to do because you get shiny object syndrome that you hear somebody's story like, oh, Airbnbs, let's try that. Oh, fix and flips, let's do that.
Yep.
Oh, multifamily, you're making money doing that. Let me dive into that. And all of a sudden you can't do anything because you're just all over the place.
Yep.
You want to just focus on that one thing, get really good at it, get a system in place, get experience, make good money, and then you can start growing out from there. And I think a lot of people miss that in real estate too.
Great call out for sure. Yep.
So I want to start wrapping this up just because I know you're super busy and try to keep this under an hour just in case you got things to do. But I do like to always close out with a few quick questions. One is, what is your favorite business investing or real estate book or even self-development book? I know you mentioned one before that you read in prison, but any other ones that come off the top of your head that you would recommend to our viewers to read that really changed your life?
Yeah, no, for sure. It's a great question. So one of the best books on kind of growing and changing marketplaces is by Dave Lindahl. He's the founder of RE Mentor, and he's got a book called Emerging Markets, and it's dated now, but the information is fundamental. It's great, especially in shifting marketplaces right now that we're going through. The Milken report just came out a couple of weeks ago, right, with kind of the new pieces and markets to follow. But that book is really powerful as far as what makes an emerging market, what are you looking for as far as indicators of growth, early signs of opportunity.
Yeah, and I mean, real estate is, if you're investing in real estate, you're in the real estate career, you have to keep in tabs with the market, because if you keep doing the same thing you're doing and you never change, I guarantee you something will go wrong and you'll fail. Because you have to adapt. And if you're not adapting and learning every single day, then you're not continuing to grow. So that's a perfect book to bring up, especially because some people don't even want to know about the market. They're like, screw it. But you kind of have to. And I mean, as you work in real estate too, and in your market, you're going to just start learning as you go anyway from talking to people, and they'll tell you what's going on. And once you just start getting into it, it's all of a sudden you're like, real estate's like a team. It's like a team sport. Everybody tries to help each other if they're the right person. I would say 90% of people in real estate try to help each other all the time. And the other 10% don't make it anywhere because they don't have an abundance mindset. It's all having that abundance mindset.
Absolutely.
All right. And then I always like to end this with you just kind of telling the audience how to reach out to you, more about maybe how to sign up for your classes or courses or see more of those, any meetups you run or attend in the areas, or charity events, business links, etc. The floor is yours to break down.
I appreciate that, man. Thanks for having me on. It's been great. And as the markets are shifting and things like that, we're doing a lot of content on Instagram. So you can follow me on my Instagram page. It's Seth Sundberg, Sundberg. And again, putting out information there. If anybody's interested in the incubator, it's at 7foot.capital. And those are kind of the best places. Happy to chat more or answer any questions or anything like that on Instagram as well.
Perfect. And I'm going to put a lot of his contact information in the bio as well, which you guys will be able to see and reach out to Seth. So Seth, it was awesome having you on. Your story is quite amazing. And I know we only had an hour here and you could probably dive into it so much more, but we'll just have to keep in touch and continue seeing what's going on. So thanks for coming on again. And thank you guys for listening.
Appreciate you having me. Thanks, man.